Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in there, take a look, see what's going on. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com. That's where I dive deeper into all this stuff, looking for opportunities and sharing them with everyone in the community. We do have a special going on. Special is the coupon code. 50% off the first month only on the monthly membership and a larger discount for the yearly membership if you'd like to sign up or switch from a monthly to a yearly. Capital Cause and buckle up buttercups. LBMA physical silver deliveries will break soon. Soon it will go from T plus 2 days or whatever to T plus 60 days, just like gold. The party will really get going then. So physical metal mania spreads to silver as over 10 million ounces has been bought since first notice day, pushing the February contract into record territory. So here comes the squeeze on silver, like we've got the squeeze on gold. David Burrows says, in the inflation versus deflation debate, the market has been sending a very clear message. Today's warmer data is not a surprise. Investors need to be hedged against inflation. So this is gold versus utilities. Inflation versus disinflation is what this kind of represents, the ratio. So as this goes up, it is inflationary. And we can look back and look when this was outperforming. Early 2000s, a consolidation, and then we had the late 2008 to 2011, which is another inflationary impulse. After that, we had a nice disinflation where utilities outperformed here. Nice move off the bottom in 2020, a full retest off that bottom. This is about the perfect time to buy it right there in 2022. And here we are ripping higher. Inflatione is incoming. Shabam Garg says auto sales continue to rise in India as the world's most populous country meets the S curve, with total sales increasing about 7%. Passenger vehicles showed an even more impressive rise of 15.5%, with strong growth in tractors and commercial vehicles from industrial activity as well. So they're moving on higher, buying more stuff, which means more demand for fossil fuels. Christophe Barode, however you pronounce that name, crisis enters a dangerous new phase. So what's going on here with the crisis in China? In worst slump on record. Average home price in 70 surveyed cities in China year-over-year change. This is new and existing homes. Down, down, down. The demographic is driving this, the lack thereof of people in home buying ages. So we've seen a decline there. China's property sales shrinks to a level seen 14 years ago. Peaked out all through here. Decline. It generally declines for, usually you see a bottom from the peak about 5 years after. So if this peaked in 2021, I would guess 2026 will probably be the bottom. And then we've got developers' dollar bonds trade at distressed levels. And then the bank loans to Chinese builders plunge near 2012 levels. Big move lower after 2020. And we're probably bottoming here this year or next is what my guess would be for this particular metric. So I think this is going to be a buying opportunity for Chinese stocks, because whenever you get a real estate crash, generally the stock market pulls back quite a bit. It's a disinflationary or deflationary deleveraging event. And then technology stocks do real well in a low inflation, low interest rate environment for China. Don Johnson says, and there goes the Texas job market. Chevron will lay off 15 to 20% of its global workforce, impacting around 9,000 employees. The U.S. oil company said on Wednesday during an internal employee town hall meeting. According to a source familiar with the matter. Yeah, we got real big drill baby drill boom going on here with energy service companies and the large energy exploration. I'll say vertically integrated company laying off a lot of people. This does not look like a boom to me. This looks like a bottom, and that's what happens and what you see when you get a ratio of oil to gold at 40 to 1. What that means is that inflation is going up and the oil price is too low. We need oil to be probably 100, 120 is probably where we need it to be as inflation goes up. And then 100, 120 will be a good price that could potentially spur growth in supply of oil in the intermediate term or short term, I should say. We will have to use or get through some of our um, I'll say idled supply that OPEC has. So that'll probably take a year to get through that, and then we'll see what happens after that. Northstar says we often look at gold versus the S&P 500. Here's the S&P 500 versus gold. Below the red line, it's all over. This is capital rotation right in front of our eyes, and it will either make or break your trades and investments for the next 10 years. Don't be on the wrong side of it. So gold is starting to outperform the S&P. We've broken a lot of support lines that are not horizontal. They're kind of 45-degree. The horizontal support line here is the kind of last standing support. We start to break through that, and basically it's confirmed and it's all good to go. I think this is coming no matter what. That's my take on it. And the reason my take is on that is because of all the bottoming patterns I see in commodities, the bottoming patterns I see in currencies. It's all information showing me that we're about to turn the corner for all of this. This is just one metric that is showing the turn of that corner. What he says here says when the chart breaks down below the moving averages, the Ichimoku cloud and support line, we have gold beating the stock market to an extent that creates a capital rotation event leading stock markets to fall 50% plus and gold to double again, and then double again. Big gold bull market. Gold's already in its stride. It's ripping. Silver's about to get ripping. Platinum is about to get ripping. The conditions that this occurs under, platinum will outperform the stock market, and platinum will outperform gold. That is when you know that stocks will continually go down, is when the ratio of platinum goes up against gold. That's what historically we've seen, and that's generally kind of the guy that kicks off this bull market. When stocks roll over, you could also see silver really rip in the beginning. So gold and silver, gold will account for the money supply first. Platinum will come later when the money comes through the system. It'll go at the same time generally as when oil does. So we could see gold and silver rip first. Gold's already ripping. Silver could rip here next, and then whenever platinum decides to rip and oil, they'll follow after, I think. Implied U.S. oil production this week was extremely weak. This is surprising because associated gas production hit an all-time high last week. Those Permian well results are going to look pretty disastrous. So you can see that the U.S. oil production tracking, it's rolling over, guys. We've been flat since 2023. And I don't know if we're going to get any higher. We're pretty much peaked out, and it looks like we could maybe even roll over. We'll see. I know the rig count's been declining, and if rig count goes back up, maybe we can get it up a little bit, but it doesn't look that great for oil. This is U.S. oil production composite index. The associated gas production continues to go up, but your oil production is falling off. It's falling off. It's not keeping pace with it. So they're producing more and more natural gas and less oil from those wells. And eventually the oil is going to roll over. And that's what I think is going to be quite valuable here pretty soon. It's going to be oil, heavy oil. Peter Schiff says, Powell completely ignores the fact that the annual inflation rate has averaged 5% over the past 3 months. He claims inflation is in good place and still on track to fall to 2%. How long does inflation have to remain at 5% or higher before the Fed admits it's got it wrong? I think the Fed is just trying to appease the people in power named Trump. He wants to lower interest rates. So Powell's like, well, we'll just fudge the numbers. We'll come out, say it's under control, lower interest rates to appease Trump. And I think that's why he's doing it. I don't think he actually believes that interest or inflation is 2% or anywhere near it. So that's my take on the whole thing. Another North Star one. This is the Russell versus gold. He says stock markets are breaking down badly versus gold. This is a warning of trouble ahead. Well, it broke down here. This was 2006 that it broke down there. Is that right? No, 2005. Oh, that's Russell 2000. This is Russell versus gold. I got it. So that broke down. This is an early warning sign breaking down here. Um, and gold's ripping. So I think gold and silver are going to rip pretty hard. And then when the money, they're probably going to print money, probably a whole bunch of money printing coming at some point. And then platinum's going to rip, oil's going to rip. Between now and that time they print money, that's the big question mark of what oil will do. Do we get a false breakdown? Do we get a demand destruction event? Does the yield curve uninvert? A lot of questions that I'm sure a lot of people have. Jeff says small caps are 22% cheaper than large caps on price to earnings ratio. The years that witnessed this discount are 73, 76, 98, 2001, and 2020. Even investors who were early in 73 and 98 would have then witnessed two legendary small cap cycles from 74 to 81 and 99 to 2018. And those were two very large cycles that small caps went under. And we're right there again at what could be a beginning of a very big upcycle for small caps. This is a make or break moment for Baba. Either we make history or we disappear into oblivion forever. I don't think that's the necessary right thing. It's not make or break moment. The conditions are all rolling over in favor of Baba. This gold to Russell is in favor of Baba going higher. This SPX versus gold and gold outperforming, that's going to be good for Baba. And it's all about currency exchange rates. So I mean, Baba is going to go way up because the currency exchange rate, I think, is the yuan's going to go up. I think it deals with the dollar rolling over. I think it deals with all of the market conditions that we are seeing emerging markets go up during that time frame. So yeah, it's going to go up. And I don't think this one chart means anything. It's the combination of all those things that are behind the chart, not this chart itself, but behind it. The gold to SPX ratio, the gold to M2 money supply, the bottoming of all the commodity currencies. There is no way that all of these look the way that they do and Baba not go higher, in my opinion. With time, I'm not saying it has to go higher immediately, but with time over the next 5 or 10 years, like I don't see how it doesn't go higher. The crypto market is about to crash. I'm panic selling everything. The bears were right after all. I don't know if this guy is joking. He's got this and then the potential move lower. Some of these guys, though, Crypto Rover, is just probably joking about it. But this is crypto total market cap as it's been going lower. The Florida couple says, spoke with a couple whose total mortgage is $1,400 a month. They need a bigger home as their family is growing. Current home has a 2.6% loan, and with 10% down and 7% loan, a new home would mean $2,700 a month payment. They feel stuck. Millions of people have situations like this. Well, why don't they put more money down? Why would you put very little money down? They're going to have equity from that house because if they had to have owned the home in 2021 if they have a 2.6% loan. So if they sell it, why don't you put a much larger down payment down? If not, why don't you rent the house, buy the other house, and the rent should be quite a bit bigger than $1,400 a month, I would assume. You could use that to offset some of the costs, perhaps. So, I mean, I would rather be in a house, have a house with a 2.6 loan and feel like you're stuck than to not have it at all. That would be my situation, at least, that I would prefer to be in. Because then you have an option. You could always sell the house and get money. I would not want to be renting right now. I know what some of these homes around me rent for. I know that rent has gone up quite a bit over the past few years, and I would absolutely hate paying rent anywhere near the rent prices are right now. My mortgage is far less than a studio is right now. A studio, and we're talking a 400 or 500 square foot studio. Uh, I know the one bedrooms, they're like 1,600 a month. I'm way under that thing. So I would not want to be renting right now. And I can tell you this, when I bought my house back in when was that? I'll just say just 2017 or whatever it was. Um, people would say it's better to rent than to buy, and I'm just like shaking my head, like, okay, sure, buddy, yeah, I'm sure that's a great, that'll work out for you. It was way better to buy back then and then refinance in 2021. And my rate's pretty low. It's not as low as this person. I refinanced at 2.6%, but I got a 2.75% loan because they basically paid me to take it. I was like, okay, I'll do that. So I added points back onto it a little bit because I thought, maybe it'll go down a little bit more. It didn't. Tavi says a major disconnect between fundamentals and price is unfolding. Annual earnings estimates for the NASDAQ are down over 10%, yet the index is still near all-time highs. Meanwhile, inflation's growth rate just hit a 2-year high, a classic stagflation. Something has to give. Something has to give in my view. So NASDAQ 100 price versus the earnings per share estimates. Earnings per share estimates are going down, and the price is kind of hanging out here, and I think it's going to go down. It's going to follow earnings per share. Get ready for a move lower in the NASDAQ. And what do you think that's going to do against gold? Yep, it's going to go way down against gold. So gold's going to go up, and NASDAQ 100 is probably going to follow where earnings per share is going to go for estimates. Here is just a reminder of the great inflation of the 1970s. So far, we are following the same pattern almost perfectly in terms of this fractal. What I would say is I don't think we're like the 1970s because 1970s was the end of the interest rate move. I do think that we're closer to the 1940s right now because we've got big debt. We've got the bottom of interest rates and the breakout of interest rates. 1940s, there's a lot of similarities there. But there is similarities to the 1970s in terms of home buyers, the real estate cycle, the demographic we're in. 1940s was a good real estate market too. A lot of people came back from World War II and they bought a lot of homes. Families were formed. A lot of kids were born. The baby boomers, in the 40s and 50s. So there's a lot of similarities between the 40s and today. They're not putting families together as much and not having as much kids, but there are similarities there in terms of the demographic and the age of that demographic. Lawrence McDonald says the lost world, after 2.6 trillion in 15 months, excessive fiscal spending comes with a price. It's not free. And of course, CPI inflation year over year, it's looking like it's turning higher here. And that's your consumer price index that they like to manipulate, but it does look like it wants to go higher again. So are we going to get a big move higher, or is inflation going to come ripping through the system? Oil prices going up, platinum going up. It sure looks like it to me. It sure looks like it to me. Here's JSG, latest comparative inventory analysis using EIA data through 2/12/25. Total commercial petroleum stocks, excluding other oils, are down 1.3 million barrels week over week. Implied WTI fair value price of $85 a barrel. $13 undervalued from current market price, given the dot plot on where this would normally be, or the average, standard average, given the inventory level. So we're still underpriced or undervalued. Charlie Balillo says price increases over the last 4 years. Medical care up 9%. You know, what's crazy? Medical care is ridiculous. Um, one of my kids, this was like last year, I think, year or two ago. Um, he had trouble breathing, and I had to bring him in because he had to get a steroid or whatever to get him help breathing. Man, that costs so much money to do that. And yes, I had to go to the emergency room because it happened in at night, unfortunately. But it's a huge ripoff. It is a huge ripoff. It's like, oh my God, really that amount of money for that? We weren't in there that long, and it was expensive. CPI and used cars. I'm surprised used cars are up 21.5%. I would think they're down. I see a bunch of cars, and they're not that bad. I think prices have come back. Food at home up 23%. CPI shelter. Look at this. CPI dozen eggs 238%. Auto insurance. So speaking of auto insurance and home insurance, I switched my home and auto last year because they jacked my insurance rate up for my house. Just an FYI, they were going to jack it up over $2,000 a year, which was, I mean, that was a huge percent increase. I was going from like 3,000 to 5,000 something bucks, and I shopped around and got it back down to the original, 3 grand ish price. Then they're going to jack it up again this year. I was like, what the heck? How come every time I move, they entice you to lower the price and get the insurance, and then they jack it up the next year? It's like, you son of a. So I switched again, and I got a very good price for my home insurance, and I got a better deal on my auto insurance. So I switched again. I'm just going to be rotating every year, it seems like, in my uh, home and car insurance, and it's really annoying. I'll be honest. I absolutely hate doing this because it takes a little bit, and you have to sign up and do all that crap online. But that's what I did to keep my auto and home insurance low. Shanghai Gold Exchange limits gold price increases to 10% from the 12th of February. A lot of limit up days ahead to get to get to fair value then. Yeah, that sounds kind of interesting. Here's Grady. Get ready for the big up move in many sectors. Posted 9 weeks ago on what is coming in this article. Many will start saying they saw this coming, but they did not. Go with the service that did see it coming. This is the TSX Venture weekly log chart, and it is working its way on higher. It looks really good. It's a bullish rounded bottom arc, bullish expanding falling wedge, and we are bullish inverse head and shoulders, shoulder, head, shoulder. That is breaking to the upside for TSX Venture. This also will correlate with BABA above. It also correlates with the Canadian dollar versus the US dollar and the Australian dollar versus USD and all the other stuff. Currency exchange rates will start to change soon as these things all start to move and break out. Gold is our leader, and then everything else behind it will come. The other commodity sectors, oil, platinum, silver, copper, everything. It's all going to come. And that's your super cycle, guys. It started in 2020. We've been in a consolidation wave 2 that will be ending here at any second. And then everything will go. We are in the super cycle. And some people say, oh, this is a great super cycle. Guys, you just don't understand the waves. You don't understand the movement. It's coming. It's going to be big. Wave 3 is the big wave. It's going to be gigantic. It's probably going to last 5 to 10 years. So get ready. It's coming. Or maybe a couple years. We'll see how 2 to 10 years, put it that way. Jeff Bezos, geologist, says, Jeff Bezos, if you have a 10% chance of 100x return, you should take that bet every time. The problem is we don't know necessarily what the percent chance is. We don't know exactly what the return will be. But when I look at the charts and I look at the fractals, there are ways that I can find opportunities that I think increase the chance of a 100x return or 30x return or whatever it is. So I go into all those. I spread my money out and go into those that have the big fractals. And if you guys want to know what those are, we can look at them this weekend. I'll show you how to do it and what I look at. I'll be more specific with everything and why I am going into specific companies based off of the fractals. And the fractals are a function of a probability of it and how leveraged the balance sheet is to the commodity. And then it usually is a sign of what is to come, which will be a bigger move later if you had a big move off the bottom. Smart real estate bets. I agree with this here. He says the surge in inflationary risks in recent years that the Fed is fighting or battling is directly related to the accelerated household growth. Period. Totally agree with that. He is right. He is right. Totally agree with that. Totally. This dude is nuts on. I'm glad I'm finding people that actually know the market somewhat. Most other people, I read their sayings here, and I'm like, oh my God, what this guy's a disaster. The bankers are nervous. They fear gold and silver. You are correct. They are fearing gold and silver. They are about to rip. Global commercial flights running 11% year over year and showing consistent growth across all regions worldwide. Airbus and Boeing maintaining order backlogs of 12 to 18 years respectively. Expect to see significant growth in jet fuel consumption year after year after year. Number of commercial flights tracked here is up. That looks very good. And this is a total bubble in gold and silver or gold miners. Look at this. We've got 1% of total global assets in gold miners. We're going to make so much here when this capital rotates back to more historical averages over here. Because I don't think people realize how early we could be on this gold bull market. Hopefully you guys bought the bottom on the website. It's all about holding on here. It's all about holding on. And I'm gonna repeat that. It's all about patience and holding on. That's where your money's going to be made. This rotation will come. It's gonna happen. I just went over the gold to S&P, gold to Russell, gold to Wilshire, gold to New York Stock Exchange, gold to M2 Money Supply. It's all breaking out, guys. It's all coming. So get ready. Get ready. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Saturday, we've got a question and answer session coming up at 7 a.m. Mountain Time. Special coupon code if you guys want to join, and we'll catch you later. This is Finding Value.